What if the future of trading doesn't look like Wall Street at all? What if the next major exchange isn't built around bankers, office towers, and market opening hours, but around crypto native infrastructure that never closes? Because that's basically the story unfolding around Hyperliquid right now. Over the last few weeks, Hyperliquid's token hype has massively outperformed large parts of the crypto market. Bitcoin has looked slow, Ethereum has struggled for momentum, ETF flows into the majors have been mixed. But hype keeps attracting attention, and the reason matters far more than just price action. This isn't just another meme coin story. This is a story about the future of exchanges. And when the CEO of ICE, the company behind the New York Stock Exchange, publicly says Hyperliquid is bigger than Nasdaq and admits that he's met with the team several times, you have to stop and ask what exactly traditional finance is starting to see here. So, in today's video, I want to break down what Hyperliquid actually is and why this project could tell us a lot about where crypto is heading next. Just before we get into it, hi, my name's Paula, and on this channel we look at crypto, macro, regulation, and the stories shaping the future financial system. This is not financial advice, but hopefully by the end of this video you'll understand why Hyperliquid has become one of the most talked about projects in crypto right now. So, first of all, what actually is Hyperliquid? At its core, it's a decentralised perpetual futures exchange. The easiest way to think about this is trying to bring the speed and functionality of platforms like Binance Futures or traditional derivatives exchanges fully on chain. It has its own blockchain, an on chain order book, extremely fast execution, deep liquidity, leverage trading, and markets that run 24 hours a day. And that last part is important. Traditional finance still largely works around opening hours. Crypto doesn't. If geopolitical news breaks on a Saturday night, crypto reacts instantly. If oil spikes overnight, crypto markets are already moving before Wall Street opens. Markets have become global and consistent, and Hyperliquid is building infrastructure designed for that world. So that's one of the reasons this project matters so much. Because Hyperliquid isn't just asking, what if people traded crypto on chain? It's asking, what if all trading eventually works this way? That's why the comments from ICE CEO Jeff Sprecher was such a big moment. At the Bernstein conference, he reportedly described Hyperliquid as bigger than Nasdaq, despite having only around 11 employees. He also praised the team publicly after meeting them multiple times. Now, obviously, he doesn't literally mean the company is worth more than Nasdaq. The point he's making is that a tiny crypto native team has built a platform processing enormous trading volume while forcing traditional finance to pay attention. And that's the real shift happening here. For years, DeFi was treated like an experiment, interesting technology, but not something that could seriously compete with the traditional financial system. Hyperliquid is changing that perception. Because if traders can access leverage, liquidity, fast execution, and global markets directly on chain, then suddenly the old exchange model starts looking vulnerable. And this is where the token itself becomes important. One of the reasons Hype has been performing so strongly is because Hyperliquid generates real trading revenue. This isn't just speculation floating around a token with no economic activity underneath it. People actively trade on the platform generates fees, and a large portion of those fees is reportedly recycled into buying back hype from the market through the protocol's assistance fund. That creates a very different kind of token dynamic compared to most altcoins. More trading activity potentially means more buying pressure, and because Hyperliquid's trading volume has exploded recently, the market has started repricing hype very aggressively. But there's another layer to this story as well: ETFs. Recently, Bitwise and 21 Shares launched Hyperliquid related ETF products. And together, they reportedly attracted over $100 million in inflows shortly after launch. That's important because it expands who can access the trade. Suddenly, Hype isn't only being bought by crypto native traders using DeFi wallets. Traditional investors can gain exposure through familiar financial products. And the timing is interesting because these inflows came while Bitcoin and Ethereum ETFs were seeing weaker demand. So, this wasn't just everything is pumping, this was selective strength. And selective strength usually tells you the market is seeing something different here. Then there's the part of the story that's really starting to make people in traditional finance uncomfortable. Hyperliquid recently launched perpetual markets linked to SpaceX's private valuation before any IPO. Now, this is really important to explain properly. Buying a SpaceX perpetual is not the same as owning SpaceX stock. You don't get shares or shareholder rights. It's a synthetic market allowing traders to speculate on implied value. But from a market structure perspective, it's fascinating because crypto traders are effectively creating price discovery around private companies before public markets even exist. And that challenges the traditional finance system in a very big way. For decades, access to private markets was mostly reserved for venture capital firms, institutions, and wealthy investors. Crypto is starting to ask, what if markets form before Wall Street officially opens them? That's why traditional finance is watching this so closely. Because Hyperliquid is no longer just a crypto exchange story. It's becoming a story about who controls future market infrastructure. Now, of course, there are risks here too. The SpaceX Perpetual reportedly experienced violent volatility recently, showing how dangerous these synthetic markets can become. Regulators are also watching offshore perpetual exchanges far more closely now because they know crypto native derivative platforms are growing rapidly. And I think this is where this entire story becomes really interesting. Traditional markets spent years dismissing crypto markets. Now it's slowly being forced to adapt to them. In fact, we're already seeing regulated perpetual futures products beginning to emerge in response to demand crypto helped prove already exists. And this is something we've seen over and over again in this industry. Crypto experiments first, traditional finance copies later. Bitcoin challenged money, stablecoins challenged payments. Tokenization is challenging traditional assets, and Hyperliquid may now be challenging exchanges themselves. Because if markets can operate globally 24/7, on chain, with instant settlement and global access, then the old exchange models start looking slow. That doesn't mean Hyperliquid wins automatically. There are still huge regulatory risks, competition risks, smart contract risks, and market risks. But whether people like it or not, this project is exposing where finance may be heading next. And I think that's the real reason hype is pumping. Yes, there are whale trades, short squeezes, ETF inflows, and momentum traders involved. But underneath that, there's a much bigger narrative. The market's starting to realise Hyperliquid might not just be another crypto project. It might be a glimpse into what future financial markets eventually become. And honestly, I think that's why traditional finance is paying such close attention now. Because if crypto native exchanges continue growing at this pace, then the future competition for Nasdaq, CME, and even parts of Wall Street may not come from another traditional institution. It may come from on chain infrastructure instead. And that's a much bigger story than most people realise. Before we finish, if you enjoy these kind of conversations around crypto, macro, and the future financial system, don't forget to check out the UK Crypto Podcast, hosted by myself and Milkshake Matty. New episodes go live every Friday, 7 p.m. UK time, right here on YouTube, and you can also find us on Spotify and TikTok as well. If you enjoyed this video, please give it a like, subscribe to the channel, and let me know in the comments what you think about Hyperliquid. Is this genuinely the future of trading, or are we moving too fast for regulators to keep up? Thank you so much for watching, and I'll see you in the next one.